Thank you so much, sir, for sharing all of those insights with us. Again, I'm going to encourage you to connect with our speakers in the networking breaks. Well, for the next session is introduction to P2P lending. When you hear about P2P, we are filled with a lot of thoughts on the processes that are followed, the returns it earns, and also the risks that are involved. Let's hear it from the horse's mouth. Please welcome Mr. Bhavin Patel, co-founder and CEO, LenDen, to give us a peek into peer-to-peer lending. Mr. Bhavin Patel co-founded LenDenClub in 2015 with a vision of having an enhanced investor experience. With a diverse skill set, seasoned and honed for over a decade, he's a veteran in the finance industry. He keenly understands consumers and communities by the pulse, sensing their sentiments and fulfilling their needs. He's played a key role in enabling the business operations during the initial phase of the organization to establish a solid foundation of business, vibrant culture, talent pooling, including leadership hiring for various roles. I also have to tell you that he has been accoladed as the Entrepreneur of the Year under Business World 40 Under 40. He's a great visionary in the fintech space, and he's right here with us to take us through this next session. Ladies and gentlemen, please put your hands together for Mr. Bhavin Patel.
Thanks. Hi, everyone. Good afternoon. I'm sure you are having a very interesting day today while you are listening to a lot of industry leaders, especially on the mutual fund or alternative investment options angle. I thought, why don't I tap this opportunity and be in front of you? We discuss about P2P lending. Generally, we meet some of you. I spend some time with some of you while we are on the sales call or meeting, etc. But I thought this opportunity will give me a time to spend with you discussing much larger proposition, also give you some perspective in terms of comparison with mutual fund industry and why P2P lending should be part of one's portfolio. So P2P lending has been happening across all of our houses in informal way. Because in Indian culture, we don't hesitate to give money to friends, family members, etc. Whereas that doesn't happen in the Western culture. So it's very easy that somebody is needing money, they come to us and say कि भाविन 50,000 की ज़रूरत है, दे दे 2 महीने के बाद मैं वापस देता हूँ. Now this concept has been taken formally on the technology platform, and that's called as a P2P lending. That 50,000 rupees required by somebody is given by 50 different people, 1,000. Somebody sitting in Mumbai, somebody sitting in Chennai, somebody sitting in Singapore as an NRI. So that is possible because of technology. So why this is happening, and just going little back in the history over last 5-7 years. So if we look at Indian lending ecosystem till 2012-13, it was mainly physical disbursement of the loan which was happening. The customers were visiting branches of banks or NBFC, they were filling forms, and then they were being evaluated by credit managers sitting over there. But all that changed once a digital payment options came into place. Everybody started thinking that if digital payment can happen, can we change the scenario of giving loans to people? So during last 12-13 years, the way digital payment has changed the ecosystem of the payments, digital lending has also started changing the way people are giving loans to the customers. So if we look at the data which was published by RBI, that over 4 years between 2017 to 2020, there was a continuous growth of 2 entities. One is public sector bank, which was unexpected entrant in the area of digital lending because they were pursued to be the most physical bankers. And second was the rise of NBFCs. Why this happened? There was a huge factor behind public sector banks getting pushed towards digital lending because of launch of multiple government initiatives, giving loans through Mudra Bank, giving loans through PSB in 59.in, which was started by government. But there was a prominent factor which was driving NBFC sector. Here, the initial adoption happened in the area of bringing customer on board only via digital medium. And that's why you see there was a continuous rise, and this data is till 2020. If we look at last 2 years' data, this would be even sharper rise in last 2 years time period, especially after COVID, because a lot more innovation has happened on the digital lending side. Now, what is interesting thing for you guys out of this digital lending? Because many of us or many of you are not directly connected to lending businesses or NBFCs. So there is a scope here because somewhere digital lending is on the rise while people are taking more loans because of multiple economical factor. There is also a huge rise of adoption of technology-based investment option among all of our customers. And second, adoption of new investment avenue, which we today call as alternate investment asset classes, has gone up drastically in last 2 years time period. So people have started taking exposure across instruments because they want better interest rate. While interest rates are falling across FD or other debt instruments, what else can give me something better or something which is inflation beating, and that is leading the investment option exploration on the alternative asset class side. So these two things are very, very interesting. And if we look at today, digital lending itself is becoming a new age investment option for our customers. So if we look at a little bit historical data of P2P lending, it took P2P lending industry to reach 1,000 crore landmark first 4.5 years, between 2014 to 2018-19. If we look at today, P2P lending industry has crossed 15,000 crore disbursement, and now we are on the annual run rate of disbursing around 20,000 crore loans per annum. Now, let me give you a little perspective so that you also get comparison between what is the significance of this data. If we look back 2008, the number one AMC was having asset under management of around 55,000 crore worth of value. Today, LenDenClub has disbursed alone more than 10,000 crore worth of loans through its platform. So that's the comparison. Second, if we look at all the mutual funds together in 2003, except UTI AMC, then the AUM under management was around 75,000 crore. From there, where we have reached today. So there is a huge potential in the industry, and that is being driven by the demand and the aspiration of the people of the country. And that's why we say that digital lending is a new age investment option for all of our customers. So I explain you in a basic how P2P lending works. So it's a very transparent mechanism that somebody brings 1 lakh rupees to invest. That 1 lakh rupee is divided into thousands and lakhs of borrowers, 1 rupee to 10 rupee, 15 rupee each. And when these customers are paying their EMIs back along with the interest rate, that comes back to you in your portfolio. So how do you look at your portfolio is, for example, if you have brought 1 lakh rupees, at the end of 1 year, let's say 10% is the return, you can withdraw 1,10,000 rupees at the end of your 1 year tenure. So what's the market potential, and when we are comparing it with mutual fund, where are we heading? So in today's Indian market, there are more than 17 crore loan application which are not being addressed by any of the existing lending institution. So there is a huge scope that if there is a capital available in the market and there is a digital adoption by the lending institution, these customers can be tapped. At this moment, P2P lending industry is at 15 to 16,000 crore worth of disbursals. From here, it is heading towards 1 lakh crore worth of disbursement by 2025. So this creates a huge scope for our customers to bring capital to this instrument and earn better returns. And the CAGR is going to be 150%. There were a lot of research reports published in last 3-4 years, which were talking about P2P industry going to around $8 billion worth, $10 billion worth by 2025. But believe me, we P2P players are going to beat this by a very, very big margin, because that's the rise we have seen in last 2.5 years time period. So LenDenClub offers a P2P investment option which is called as fixed maturity peer-to-peer investment plan, wherein we try to build in feature which any customer can understand. Customer can come with different investment tenure, 1 year to 5 years, based on their tenure requirement. They can enter into multiple plans as well, that I can utilize my 1 lakh rupee by entering into 2 plans of 25,000 rupees worth of 1 year, one for 2 year, and 125,000 for 5 years as well. So multiple FMPP plans can be entered at the same time, at different time as and when you get some more liquidity in your account. Minimum investment option starts with 10,000 rupees, so that there is no burden that somebody has to spare a check of 1 lakh rupee or 5 lakh or 10 lakh rupees. This can be experimented with such a small amount as well. And if you are investing it for 5 years, the minimum yield expectation, which we have been delivering so far, has been remaining between 12 percentage to 15 percentage. So at overall portfolio level, this instrument can give a good boost to the overall returns of your client or your own portfolio. So this is our, so we recently changed our product. Earlier, the product was little different in terms of construct. We launched this FMPP in the month of July and had the first maturity date of 28th of September 2022. So these are the results from our first matured FMPP product, wherein the communication to customer was of 10 to 12% of return at their portfolio level. The minimum return which we could generate for the investor was 10.01%, and the highest was 12 point something. So 100% of our customer received return between 10 to 12 percentage. Then what kind of diversification we could achieve? So today our algorithm, which is running behind the fixed maturity peer-to-peer investment plan, is created over 1.5 years, and that is capable enough to invest loan up to 1 rupee. And now we are training it to reduce it to 0.01 as well. Just in the previous session, you were hearing out thoughts around AI and ML. And he was very, very correct when he said that algorithm takes time. So we took around 1.5 years time period to create the algorithm which is running our product FMPP. And now we are taking some more time to reduce it from 1 rupee to 0.01 rupee as well. So how it is significant? So as and when you invest your money in P2P ecosystem, that money gets divided into different borrowers. So let's take a benchmark of 1,000 rupee. If your 1,000 rupee is divided into 100 borrowers, if some borrower defaults, there will be some impact on your returns. If that 1,000 rupee is divided into 1,000 people, and some of the borrower defaults, it will not have impact on your return, principal at all. It may have impact on little bit on your returns. But what if I say that that 1,000 rupee will be divided into 10,000 different people? So your portfolio is diversified into such a large way that even if some borrowers will default, it will neither have impact on your principal nor have any kind of impact on your returns. So that's what algorithm works in digital lending or digital technology platform like us. At this moment, LenDenClub has around 22 lakh investors registered on the platform. Around 5 lakh investors are regularly investing on our platform. And these are some of the distribution details which we have shared, that how our investors are coming on the platform, which states, which locations, and from where borrowers are coming. There are around 45 lakh borrowers who came to LenDenClub to receive the loan, and we have disbursed loan to close to 25 lakh borrowers till date. Some borrowers have taken even multiple loans. So what are the risk factors one look at in P2P investments? So there are three major risks which one should look at it. One is the regulatory risk. So regulations in P2P lending came up very early, so that gives a lot of legitimacy to this sector. But at the same time, one should also check that what kind of regulations are being followed by the platform. So that covers your regulatory risk. Second is the diversification risk, which I explained earlier. So portfolio diversification is very, very important, because as per the regulation, every portfolio will have a unique composition of loan. So Bhavin's portfolio will be different and Prem's portfolio will be different, right? Even though it will be entered on the same day, same time for same maturity. So while we are saying that there will be one-to-one matching between the investor and the borrower, this diversification plays a very huge role. And third factor is the credit risk. How platform has been managing the credit risk, what has been the historical data, what kind of stress testing has happened. For example, we can consider COVID first wave, COVID second wave as the stress case scenario. So how platform managed its NPA during those periods. So LenDenClub's NPAs are somewhere around 2.45 right now. During the COVID period, it went up to 5.91, and again now stabilized around 2.45. So that gives you an idea about what kind of credit risk is involved in the investment on a particular platform. So these are the three risk factors which you can study more before you try out this instrument or you get onboarded with any of the P2P platform and offer this as an investment option with your client base. So that's it from my side. Thanks a lot for patientful hearing.